All right. Hey, what's up, guys? Hello, hello, hello. Welcome, guys. Oh, thank you for 6 likes. Welcome, guys. We will begin shortly as people are slowly seeing the notification that I'm live. We've just been live for just about under 2 minutes here, so you guys have not missed anything. But hopefully you guys have been enjoying the music, and yeah, let's have a great Tuesday live stream. Alright, and in the meantime too as well, while you guys are enjoying the stream, and well, the music, you guys read the title and the description box down below. All right, so let's begin. Okay, so I'm gonna just start out right off the bat talking about this question, right? So is the market rally fake? All right, so there's a lot of dubious people out there who are saying that, you know, this market rally is just a simple bear market bounce, right? This is just an oversold bounce, a dead cat bounce. And what do I say to that personally from a subjective standpoint? They may be right. Right? And so here's the thing, right? So we need to go back to the time periods where the S&P 500 had its rough patches. All right, so if you go back to even 2000, the dot-com bubble crash, right, or the burst, or even the 2008 Great Financial Crisis, right, or even just most recently the COVID, right, the COVID market crash, right? So let's first off go back to the 2008 market crash, right? So after we had this nice big move down, okay, there are still moments where we had some very large moves down. I mean, if you just take a look here on the monthly time frame on the S&P 500, in May of 2010, we had a very large move down at nearing, well, it was past 8% at this point, but the monthly counts to close at negative 7.95%, right? And then the following month closed at negative 5.62%, okay? And so this has all occurred while the markets began to recover from this March lows of 2009. So this is kind of basically after the banks were all bailed out and everything, right? So I don't think I have to go over the Great Financial Crash with you guys, right? So you know, the economy was obviously not that great still, but there was a lot of hope, right? There was a lot of hope that the economy will recover, the financial markets will recover, the entire financial global markets will recover as well, since globally, markets worldwide were affected by what happened in the US. And so the S&P 500 had its moments as it was coming back up. So if you just take a look at the lows from here, right, and go up to the point where we had that nice big move back down in May of 2010, all right, this is an 82% move up, right, an 82% oversold bounce, right, from the lows of this great financial crash. And so, at these moments, I'm sure there's a lot of doubters, there's a lot of people who just didn't believe that the markets should recover from this point forward. And so whenever we did have these major downshift moves, where we again exceeded over 3 to 5% here, as we saw in May of 2010 and June of 2010, these are one of the things where we have markets moving up, right? The markets have pivoted and bounced, and overall sectors are looking good. So overall market internals, market breadth, whatever you want to call it, is looking great, right? And the price action is now moving to the upside. We have higher highs and higher lows, okay? And so these are the periods where we have those people who are doubting that we can't, we can't recover back to the highs. So this is a new start, a new paradigm shift where the markets will now move lower and lower and lower. Okay. Now, here's the thing: they could have been right? But now I'm just obviously from hindsight perspective, we're looking in the past. We obviously have seen that this was just a simple higher low that was made, and we saw a very similar move back down in 2011. Right. So this is again still post-Great Financial Crisis, right? This is the post-damages that have come out from the Great Financial Crisis. And there's a lot of people here from 2009 all the way up into 2012 who were really not just ecstatic about the recovery of the overall market, and they continue to shout at the top of their lungs that the markets will continue to crash, and we'll be seeing a major shift where the markets are not going to be able to continue to go up higher, even though that is completely counter to the long-term trend of markets always moving to the top right corner of your screen, right? Or it continues to go up, right? So obviously specifically when we're talking about the S&P 500 ETF or the benchmark market, right? So 2011 was basically the same as well, right? August and September, right? We had a huge move down. Obviously this is more, I think this was like a 10% drop, right? So basically a market correction. Oh, more than 10%. It's like 15%. So this is very similar to what we've been seeing now as well. So all that being said, okay, if you guys go all the way back to the current time here, right? This month of April, all right, we were down, I believe, like negative 15.02%. I did the math here for the report, but I don't have the exact numbers anymore, but in my head, I don't want to pull up my report now, but so somewhere around negative 15%, okay? So you guys get the point for just this month alone. And so if you kind of apply that that scenario from 2011, 2010, right? Or actually, let me go back again. All right, so if you apply the same areas, I guess price action and market breadth and just overall sentiment from 2010 then 2011 to now, it kind of feels the same, right? But here's the thing, right? I'm not saying that we're gonna just skyrocket up higher, right? Because they were wrong, right? Obviously they were wrong in hindsight, and they were wrong simply because, well, market breadth was great overall. The economy was slowly recovering, and if you guys didn't know, the markets are always discounting for the future, right? And how the overall economy will be in the future. And so far, if we kind of apply the same perspectives onto the current market action, right? I'm not saying that we'll be going in a very nice V-shaped recovery back to highs and make a new all-time high the next 2 to 3 months. I'm not saying that, but I'm still open to the possibility that we can still have yet another month where we move back down to retest at least the April lows. I've been saying this to you guys, that we can actually see a retest of these lows maybe in the next month or so. Now, in the meantime, right, in the meantime of that perspective of a potential move back down in the mid to maybe even long term, right, we're still going to be able to see bounces like we've been seeing now, right? We've been scouting for a market bottom since April began, and that's exactly what we got in April. And this massive wick, this bottom shadow on this monthly candlestick. So is the market rally fake, right? I don't think so. Why? Because first of all, obviously this is nuanced, but just based off of the surface level perspective of asking this question, right? Just the superficial aspect of this question, I'm going to say no, right? Because we have market breadth acting very, very well. So very similar to what we saw in 2010 and 2011. So again, just the aftermath of the great financial crash after we bottomed out in 2009 as well, in March of 2009 as well. So, or let me make sure I got that right. Yeah. So, and that kind of aligns with 2020 as well. So, you know, in this perspective, right? Obviously, from a timely standpoint or time stamp, I guess is what is the better word here. We are not following that. We didn't bottom in March. We have a completely different macro environment, completely different factors that are affecting the overall benchmark markets. And so obviously the tariffs, the trade war, right, is currently driving the markets, and headlines are continuously driving the markets as well. And what President Trump is saying too. So, you know, we didn't bottom out in March, but again, the entire scenario is kind of similar to what we've been seeing post Great Financial Crash, and you know, the entire crisis, it just kind of reminds me of how the overall markets are moving now, because sentiment is still very, very bad. We saw consumer confidence hitting lows again. We're back down to the lows that we saw in 2020. So 5 years ago, believe it or not, that was 5 years ago, guys. You know, we're also seeing just the overall expectations of where the stock market will be at its lows. All right, so sentiment is really bad. I mean, it's really bad out there, guys. If you guys take a look at the plethora of data that is available from major institutions, like from our government itself, confidence and just overall sentiment is bad, right? Not just from retail investors or institutional investors. They're both bad. But if you just take a look at the people who are not active investors, or people who are just you know, regular 9 to 5 people who just work, right? The sentiment is down in the toilet, okay? And that's the exact same type of sentiment that we saw back in the post-Great Financial Crash, as the markets were actively recovering. And so with sentiment so bad, we're also seeing some great price action to the upside. And that's exactly what we're seeing too, just like what we saw in 2010 and 2011, as I've just shown you guys. And so you know, even during periods where we have this, you know, a bad sentiment, but on the other hand, great price action, along with, on top of that, let me just put a cherry on top there, market breadth being absolutely incredible. Okay, it just seems like we're kind of trying to follow exactly the same playbook that we saw back in 2011 and back in 2010, as the markets were recovering and as the overall economy was recovering, right? But obviously, again, right, I don't want you guys to just take my words, you know, at a superficial level. You guys should know that I'm also saying this from a nuanced perspective. I do know that we're in a completely different environment, right, compared to you know, decades ago, like in you know, 2008, 2009, 2010, okay, you guys get what I'm saying, right? So, you know, obviously from this current timeline that we're in now, we have still yet to see the current effects, at the actual real effects of these heightened tariffs, these crazy tariff percentages that we've been seeing being put on by this current administration on other countries, which will be passed down to the U.S. consumer, as you guys should all know that. I mean, that's basic economics, right? That's economy 101, right? So, or economics 101. So, you know, it's too early to say whether or not we're going to continue to go down, but with these tariffs still being implemented. It's not like we've seen all the tariffs that were placed since the beginning of this year completely lifted off, and going back to the tariff percentages that we've had before. We haven't seen that yet, so it's too early to tell and give you guys an answer as to whether or not these tariffs are having a completely negative effect on economic growth or labor market or inflation. However, right, that's a big asterisk there. We definitely do know what can occur in the next couple of months if these current tariffs stay, right? And that is where I get my perspective from for the mid to long term perspectives. Does that make sense, guys? Right? And again, you might be asking me, well, Andrew, how would we know, right, from a labor market or inflation or economic perspective of what these tariffs will do? Because we have history to remember, right? There's a history of economics, okay? And humans tend to forget history, right? So again, I'm not going to go over that. I've written a lot about that throughout my CFO Swing and Watch reports. If you guys are a reader, all right, if you guys are a reader and watching the stream and watching the replays, you guys can go back to the newsletters and reports and read that. But again, all of that, the economy, the labor market, inflation, they're all going to have a negative effect from the impacts of these tariffs, right? And we know that from history, right? And just from basic economics. Okay, so now here's where we are now, present. So after today's closing price, right, here's where we are at now with the market. The markets are now basically moving from what we've seen so far from April's lows of 481.80 to where we closed today at 554.32. We have definitely we are definitely seeing the markets potentially pricing in that these tariffs aren't going to do too much damage in the next couple of months. So that is the most optimistic take that I can have for this overall market rally. So again, my answer is no, but with some nuances, right? As it is with everything, right? Nothing is black and white, even in the stock market. Even though we have the bid and ask driving prices up and down, demand and supply driving prices up and down, right? So here's where things get interesting, right? So as we've seen in May and June of 2010, or August and September of 2011, okay, we can still have a down month in May, right? Sure, we can have a nice bounce, and sure, maybe we can even break past April's highs here of 567.42 as we lead into the monthly expiration date of May, right? Since April will be closing out tomorrow, right? So that is possible, right? And that's actually the take that I'm going to have, the perspective and prediction that I will take, where we will try to come back up, and from a technical perspective as well, to break over this month's highs and eventually retest this monthly 10 SMA that is now starting to flatten out, right? It's always been curling up, but now it's flattening out as the price has been moving straight down from March to April, right? So that would mean that we will be either, maybe topping out around 570 to 575, that potential area, as the monthly 10 SMA continues to flatten out and maybe even curl lower. And if you guys are readers of the report and also a private member of the Private CFO Discord, you guys should know why. Now that I've given you guys the reason why, I gave you guys a potential retest for the markets at 570 to 575. Well, that's because if you take a look at the monthly time frame, we have this monthly 10 SMA coming up, right? And it's flattening out, which can I guess motivate prices to come back up and retest it, right? Now, here is the problem, right? So if we were to again overlay the conditions that we saw in 2010 to 2011, so specifically May through June 2010 and August to September of 2011, we can still have a longer move down from post OPEX May, right? For the month of May, all the way up into the summer months, right? Into quarter 3. Okay, and that's something that we need to be prepared for, right? And that's the reason why I decided to talk about this in tonight's live stream, right? So again, this market rally is not fake. We've obviously seen this market rally from from negative 15+% to the downside and all the way back up to negative 0.91% as of today's closing price. So that's a huge range, right? So we had this market rally, and if you were able to participate in it just like what we did at Charts Focus 1, congrats, right? But now is where we need to be a bit wary, right? We need to be cautious because we're nearing the kind of upper ranges of the previous month's lows and closing price, right? And that's the reason why we've been kind of stalling out like we did today. If you go on the daily time frame, right? We obviously still making higher highs and higher lows, but the ranges are getting tighter and tighter and tighter, right? And today's range was just 0.63% from yesterday's closing price. That's not really big of a change, right? And again, we have to take this day by day, and the day-to-day change is not that drastic anymore, right? And this huge move back up higher is obviously, you know, if we do decide to long now, I would say to be cautious, right? I would advise that you guys should be cautious. You know, it's not something where you guys should be absolutely just going all in regarding where the market is at now currently. And based on what I've just told you guys for the past 10 to 15 minutes so far, right? You know, we need to be prepared for the possibility for the markets to make another leg down, and we've seen that in 2010 May to June and 2011 August to September. And again, as a reminder, right, during those 2 months of those 2 separate years, it was post financial crash, the great financial crash of 2008, and at the same time, simultaneously, right, we're still in an uptrend, right? We're completely recovering from this massive market crash. Okay, and so again, mid to long term, in just this fiscal year, so let me be even more specific, right? Mid to long term, there's still a possibility for us to continue to move back down, as we've seen here in 2011 and as we saw here in 2010. Okay, each of these monthly candlesticks may look small, but these are huge percentage moves lower, right? And this is back in the 2010s, right? So completely different from where we're at now, obviously. Okay, if you guys can't see that, well, I don't think I have to explain that for you to find the reasons why we are kind of different right now as to where the prices are at. And there's a plethora of reasons, but I'm not gonna go into that. That's not the topic of tonight's stream. So, hey, what's up, guys? Hello. Make sure you guys smash that like button down below if you guys are enjoying this stream. And hey, you guys, I see your guys' reactions there. Awesome. All right. So, for everyone who's just joining in now, okay, so here is my summary, my summation of what I've just said for the past 15 minutes. Okay, is the market rally fake? No. Are people correct in being dubious and just skeptical and just not believing in this market rally? There are some merits to it, right? There is some sort of legitimacy for their feelings of being, you know, skeptical about this market rally in this current market environment and this current economic environment, right? Because again, this is just the complete web of things that you have to consider when you're asking this question of whether or not this market rally is fake, right? So the market rally is not fake, right? So that's my answer, but with some nuances. Okay, and those are the nuances that I've been talking about so far for the past 15 and more minutes now. Okay, so here's where we need to be prepared, right? Once we're able to at least move past April's highs, right? This is my own technical prediction now from my analysis on a time frame perspective, right? The daily, weekly, and monthly time frame perspectives. We should at least hit around 570, right? So the maximum that we can get to is 570, but that means we need to get over this daily 50 SMA, this dark blue line, which is also converging right at this 560 level. And in fact, the daily 50 SMA continues to curl down, and at some point, either tomorrow or by the end of this week, we will have retested it, and most likely we will have rejected it. Why? Because here we go. Right? We have this entire area here that is now a major area of supply. So somewhere around 549.50, or if you guys simply want to round up, 550 to around 574.50, or again, if you just want to round up, 575. This is where we had that huge kind of distribution that we saw for a couple of trading days, couple of weeks here before we saw that massive move down due to tariff news, right? And the markets were feeling a lot more uncertain compared to the start of this year, right? So this kind of distribution phase here is now a huge area of supply. But here's where things could get interesting, because again, what is my current short-term targets? 560, and my mid-term targets will be around 570 to around 575. Okay, so again, this 560, why? Because, well, we should be retesting with the daily 50 SMA. Now, why the daily 50 SMA? Well, first of all, we did close above 549.50 or 550, which is the lower range level of support at this distribution area for 3 days in a row, right? So yesterday and on Friday, right? So last Friday. So this is important because again, we were also closing above the huge range of a candlestick here that we made on April 9th. So this is the day where we got that 90-day tariff pause, right? That news was huge and the markets really liked it. But the fact that we've broken above the high of this candlestick of 548.62, and we're now within the range of this entire distribution area tells me that we have just hit stops for the last 3 days. And stops for who? For the short sellers, right? So this should continue as long as the price continues to stay above this 550 or 549.50 level. All right, so that is my basis as to the reasons why I want to see an official retest of this daily 50 SMA, or at least around the convergence point of the daily 50 SMA along with the whole number level of 560. Now, the second part about this potential continuation of this market rally so far to 570 to 575 is, well, again, go back to the monthly time frame for the S&P 500 and take a look at its monthly 10 SMA. All right, we have the monthly 10 SMA back down now. It's kind of flatlining around this 574.50 to 575 level. Okay, so that's from a monthly perspective, and on a daily perspective, all right, that also aligns with where the daily 200 SMA is now flattening out, right? So the daily 200 SMA was actually, believe it or not, beginning to curl down as the markets continue to move lower around mid to late April, right? Obviously, we're still in late April now, but we're kind of in the final days of April, but you guys know what I mean. So around here, right? So around these trading days, we saw the daily 200 SMA starting to curl down, okay? Now, what's important about this daily 200 SMA is that we've actually begun to flatten out as the price began to move back up higher, which means that the price will most likely try to get past, or at least retest, 200 SMA. And again, we have to get past this 570 whole number level to retest with the daily 200 SMA, which has begun to flatline. So that is a great sign to see. Now again, this is all on the basis that this market rally will continue. Does that make sense? Hey, what's up guys? Wow, there's a lot of people joining in today. Welcome guys, welcome. Make sure you guys hit that like button down below if this is all making sense, right? So hopefully I'm tying in everything together now that I've gotten kind of the macro stuff out of the way and kind of the overall market outlook and view and kind of the historical perspective of where we are at now, using, you know, different time periods like at post GFC, right, the Great Financial Crash. You know, if that makes sense now, please hit that like button down below, or you guys can just react on the live chat room as, oh, there it is. All right, so thank you guys, thank you, I see it there. All right, but again, make sure you guys smash that like button down below because it helps out with the YouTube algorithm. And again, if you're not a subscriber yet for this channel, please consider hitting that subscribe button. That also helps a lot, right? So so with that out of the way, you know, these two areas, the daily 200 and the daily 50 SMA, is currently my most important areas, right? These are major SMAs that we need to consider for a potential retest before we see any type of a large move lower. Okay, so again, this should also tie with the fact that I'm also expecting, or at least predicting, that we can continue to move up higher into May's OPEX date. So the next month's OPEX date, which is May 16th, all right, 5/16. So there's plenty of time for the markets to try to retest with 560, or at least the daily 50 SMA, and then get past this level here, 565, and then eventually reach that range of 570 to 575, or if you want to be more specific, this daily 200 SMA retest, and the most possible maximum target that I could potentially see the markets going to on this current market rally, 575, or if you want to be a bit more specific, 574.50. Does that make sense? Okay. Hey, there it is. Thank you guys for your reactions there on the your emojis, I guess, or your reactions, yeah, in the chat room. Okay. Okay, that shows me that you guys are paying attention, and what I'm saying makes sense. Okay, so again, that should kind of hopefully answer you guys' question as to, well, is this market rally fake, right? Or if you guys have been skeptical or just being, you know, completely doubtful of this market rally, you guys should have some sort of a guidance, is what I should say, that should help you guys out in the next couple of weeks, even into the next couple of months, which is also, when I say it from that perspective, which could be all the way into Q3 of this year as well. Okay, so hopefully, you know, that makes sense, and obviously, hopefully, the technical analysis that I'm giving you guys here, the basic technical analysis that I'm giving you guys for so far tonight, helps out in that perspective as well. Okay. So does anyone have any questions so far regarding what I've just talked about with this market rally being fake or not? No? Wow, we have 30 people in here. Oh, we did have 30 people in here at one point. Wow, wow, wow. Didn't update here for me, but I see the views here. Awesome, awesome, awesome. Okay, so with that being said, let's go over to the next section of the stream for tonight, which is Tesla. Okay, so Tesla, I'll be showing you guys the MACD later. There's a reason why I put it on for tonight, but Tesla has been finally breaking back to the upside, right? This one has been absolutely in the dumpsters, right? This thing retraced all of its gains, right? I should say, yeah, it doubled here from August all the way up into January. Well, I should say December of last year, right? And January is when we began to see that complete destruction of these gains, and it completely gave up everything. All right, so it came right back down to August's price action, right? So this complete doubling of the share price has resulted into nothing. Right? So this is where things get really interesting, because with this complete crappy price action all the way down to the toilet here, earnings came by, and absolutely horrible earnings results. And this is not even pricing in the current, I guess, sentiment that the Tesla brand has currently taken itself, if you guys know what I mean, around the world, right? This is not even regarding the current sentiment that the entire world has and other countries have on this company. So it should be interesting as to how they report in the next quarterly earnings, but that's for a later topic. But the fact that the price was able to react to the upside off of such horrible numbers just tells you how much this short and this complete move down has been, right? This amazing move to the down, amazing move to the downside, and obviously the shorts that have profited off of it, right? So this is how extreme the shorts have gotten at this point. That's exactly what the earnings reaction was telling us. And so that is the reasons why, those are the reasons why actually, that I am long Tesla, and I have been, right, since this nice move up on earnings, right, post earnings. Okay, and so you know, I'm not going to disclose exactly my position because that is strictly for my members only and my CFA Swing Watch report readers. But if you guys are interested in what positions that we have on Tesla, and including the leveraged ETF TSLA, which is the 2 times leveraged ETF for Tesla, okay, make sure you guys join us. Okay, so you know, this is really interesting, right? Because there is short covering going on, and just like what I just described on the S&P 500, as we have closed over this lower range support level of 550 or 554.50, there should be some shorts covering their butts now, right? Because price action is starting to kind of not go their way, right? They need to lock in profits, or at least try to get out as soon as possible before price decide to skyrocket and, you know, completely ruin their short position that they've had for months or weeks at a time from wherever they entered, basically. Okay, so you know, the same thing here applies for Tesla, right? And the shorts are definitely beginning to cover here. How do we know this? Because of the price action after earnings, right? I'm just repeating myself here at this point. So I love the fact that we have come back to retest the 200 SMA twice now, right? Yesterday and today, and we closed right on top of it. All right, so the daily 200 SMA, the yellow line, closed at 291.71, and the closing price was at 292.03. So a couple cents above the daily 200 SMA. That is great news, right? But not only that, if we take a look on the intraday time frame, or the 2-hour time frame, we're making a very nice bull flag. If you guys can't see it, let me just give you guys a very crude drawing. Right, very nice Momo bull flag that's about to form here, and should continue to form into the end of this week as the 2-hour 21 SMA catches up. But again, that's beneath me for now. Right, I'm just gonna take this day by day, not taking a look at the 2-hour time frame or any of the other intraday time frames, since I am swinging this. So I'll be looking at this from a daily price action perspective, and let's take a look at this without those ugly squiggly lines. So you know, I still think that there is a good opportunity here for Tesla. At the minimum, if you're gonna squeeze some shorts out from this point forward, especially since Tesla is trying to get past the daily 200 SMA, we can at the minimum reach 300 here, right? And possibly even reach to around 305. Right, 305 is most likely going to be my maximum target for Tesla before I take off all my positions in Tesla and TSLA as well. Okay, that's the 2-time leveraged ETF for Tesla. Does it make sense, guys? Wow, we've had 35 people in here tonight. Awesome. Okay, so for anyone who's just joining in now, make sure you guys watch the replay. I answer the question that is asked in the title of the stream. Is this market rally fake? So please go ahead and watch the replay once the stream is done. Okay, so this is again very interesting to see for Tesla, right? And last but not least, let's take a look at Uber, right? So Uber, well, Uber has been one of the very relatively strong companies out there, right, regarding the share price during this entire tariff debacle and market environment. And Uber has basically been moving sideways for over a year. That's right. Because go all the way back to January or even February of last year. Well, take a look at this, right? I mean, what's going on here? Right? So Uber hasn't done anything for over a year. And during that entire time where it's just been moving sideways, the price has been making a very nice base. And specifically a base from 64 all the way up into 82. So it's a very, very wide range. And guess what? This range is being retested again and tried again during this current market environment where we saw that April lows being hit. Again, the overall markets were crashing, so a lot of the leading names like Uber were crashing as well. And we hit a low and we retested the $64 support level, and now we pivoted off of it and we continue to range trade all the way up into this $82 level, which we have yet to hit. But I'm positive that once we're able to get past 80 and once we're able to use this whole number level of 80 as a new level of support, we can at least retest 82, and potentially, if market conditions allow Uber to, we can break out over 82 and potentially retest the all-time high level at the whole number level of $87. Okay. All right. So again, I want to talk about Uber because again, it's kind of related to Tesla, but at the same time, Uber in itself is in its own category of relative strength and momentum right now, right? Very good bullish momentum and price action for the last 4 weeks. A very nice V-shaped recovery at that as well. I mean, well, I don't know what else you would call this if you guys don't agree with me, but this is a very nice V-shaped recovery. Obviously, that there will be pullbacks here and there, but these V-shaped recoveries do tend to give us a very, very nice continued move up higher, and ultimately we can see a nice breakout into all-time highs, right? And option contracts and, well, options activity specifically are currently telling us that there is a possibility that we can be seeing new all-time highs in the next couple of months. Okay, I'm not going to tell you guys which contracts. You guys have to figure that out yourselves. Or if you don't want to waste your time doing that, if you guys want to get information about such options activity very, very quickly like we did here at Charts Focus 1, and the reasons why we have a current swing trade position on Uber, please join us and become a reader of the CFO Swing and Watch report, which will automatically give you guys a complete full access to the private CFO Discord channel where I have posted this options activity on Uber a couple weeks back. Or I think it was last week, right? So again, if you guys want to join and if you guys want to, well, get information like that a lot earlier, please check out the description box down below, and you guys will not regret joining us tonight. Okay, and again, I am always saying I am saying that you guys won't regret it because, well, people have told me that. Right? I'm not taking anything out of someone's mouth. Well, I actually am. I'm taking words out of my reader's mouth, but they have all said that they have not regretted joining since, and they will continue to read the report every single Sunday night. All right. Okay, so that is it for tonight, guys. Oh, that was almost 45 minutes of live streaming here. Yeah, newsletter is lit. Thank you, Joe. It is very much real. Right? So, guys, if you guys really want to join, the link is down below. I mean, I've always said this. I've said it in all my other videos. And yes, do nothing. Join. Exactly. You only need one word, right? Like you said there, join. Right? So thank you for saying that as well. Do nothing. But yes, join. Right? So, well, yeah. I mean, if you guys want to join, please look at the description box down below, and the link will be there. And there are different tiers. And the ball is in your court of what tier you guys want to choose. I'll give you that freedom. It gives you a detailed breakdown of what each tier brings, what perks each tier has. So please read that thoroughly before you guys make your decision. But then again, the choice is yours. You guys, whatever you guys want to do with your money, go ahead and choose whatever tier you want to choose using your money. So yeah, that is pretty much it, guys. Be careful tomorrow. It's the end of the month of April, and usually from a historical perspective, we do tend to see a pullback at the end of the month of April as we head into mid quarter 2. Just a little hint there as to what you guys should be anticipating tomorrow, price action wise for the overall markets. And if you guys just take a look at the futures as well, there is a current pullback occurring right now. So Just a little hint. Just a little hint. Right? Just tiny tidbits of hints that I want to give you guys. Right? So again, be careful tomorrow. We're gonna be getting lit, as Joe has said here, at Charts Focus 1. So if you guys want to be lit with us, please again check out the link down below in the description box. But other than that, if you guys enjoyed this stream, please hit that like button down below. And if you guys are new here, and if you guys enjoyed everything that I've said from the beginning all the up into this point in time for the stream, please hit that subscribe button. And if you guys want to get an extra level of subscription perks for subscribing to the channel, make sure you guys hit that notification bell as well, which will appear once you guys have subscribed to the channel. All right, and that will allow you guys to keep up with me as to what goes on in this channel, and whether I am live or not, or when I have uploaded a new video like I did yesterday. So again, make sure you guys watch the video that I've uploaded yesterday if you guys didn't get to catch it. Alright, so that is it for tonight. I will see you guys on Thursday at the same time at 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. Have a great rest of your night and good luck tomorrow.